How's it going, everyone? It's Sam. Today we're going to talk about something that you do not want to buy as a crypto investor. I also want to talk about some of the top news here today and go over some big earnings that just came out. If you don't mind, hit subscribe, turn on that bell notification so you can see future videos just like this one as soon as they come out. While you're down there, why don't you just take a look at Treasure, where they're giving you 15% off of all your purchases if you type in My Financial Friend with a capital M. And they do have a new device. I'm actually going to do a review of it here soon, the Treasure Safe 3. It's by far the safest crypto wallet out there. I would highly suggest checking that out. And also click on Bag Tracker AI. We've had so many people register just over the last couple of days. Pre-register here, put in your name and email. Here we're going to be able to track all your assets in one app and denominate in different cryptocurrencies. So it's going to be a really cool product. But let's take a look at the market. Crypto falling a bit today. Bitcoin down 2% on the last 24 hours. And honestly, that's not that bad because the traditional markets are falling even more than this. The NASDAQ in general is down about 2%, but we had companies like Facebook that had pretty good earnings yesterday, at least for the quarter, that gave a little bit of soft guidance, falling even more than that throughout the day. We had MasterCard down. We have a lot of companies falling. And what's probably the reason for that, US GDP came at 4.9% year over year, and the expectation was 4.3%. So the economy is hotter than people expected, making people think we're going to have to go higher or keep rates higher for longer. Now, Bitcoin in general, still doing quite well. Dominance did fall down a little bit, but you can see we had previous support here. We had bounced off of it a couple times, and you can see a pretty interesting trend line too. We came and bounced off of it a couple times, got rejected, broke through it, and then we bounced right back off of it. So we continue to see Bitcoin staying pretty dominant, up at 54%, and the price just sticking in this range, which is pretty awesome to see. Even on a weekday in the traditional markets, Bitcoin still doing extremely well. Now, what's not doing well? Anything wrapped. I've had someone just recently reach out about a wrapped Bitcoin, which I'll talk about in a second, but this person says, wrap your Bitcoin on Solana, they said. Much utility, so yield. Basically saying, yeah, you could get yield on Bitcoin if you have it wrapped. A lot of the time people will lend on this, and this was wrapped by FTX or Alameda. So then when they went bankrupt, the price went down a lot. And I literally, you'll think, why would anyone do this? I literally had someone this week, probably watching this video, that asked me about BTCB, which is basically the equivalent of this, just instead of Solana or instead of FTX, it's with Binance. But they asked about this, and I said I would not buy this. I don't care if there's a little bit of a discount. I'd rather buy Bitcoin, the real asset, instead of using BTCB. Unless you're some kind of trader and you are super sophisticated, I don't think there's any reason to take the risk of buying something that is a derivative of Bitcoin, like a wrapped cryptocurrency, instead of Bitcoin itself. If you want a derivative, go buy like GBTC or something like that doesn't have all the risk that a wrapped cryptocurrency has. So those are the cryptos I would not touch. Be careful because there are a lot of them out there, and people will say, oh, well, you can get 20% yield. Just deposit your Bitcoin and we'll give you this wrapped Bitcoin. And I just would not touch it. It's not worth the risk. Now, with that being said, I want to hit on a couple big pieces of news. BP is boosting their EV charging network with a $100 million order of Tesla ultra-fast chargers. How interesting is that? That they are going out and they are buying Tesla hardware from Tesla because they feel the tide's turning. I mean, this is a giant oil company. They're going to be putting these at a lot of their gas stations, helping people, I think, even more transition to EVs. $100 million goes a long way in terms of charging stations. So this will help build out the network even faster. And this is the first time Tesla's charging hardware will be purchased for an independent EV charging network. Again, just shows how far Tesla is in the lead for not just their vehicle manufacturing, but also just their technology in general, their fast charging and their charging units in general. So pretty cool news from there. I want to cover Amazon too. Amazon.com announces third quarter results. Net sales increased 13% to 143.1 billion. I mean, imagine that. They had 127 billion in the third quarter last year. Now they have 143 billion. I mean, we're talking about a $16 billion increase in 1 year. That's just crazy. They say excluding $1.4 billion of favorable impact from year-over-year changes in foreign exchange rates throughout the year or throughout the quarter, net sales increased 11% since last year. North America segment sales increased 11%. AWS segment sales increased 12% year over year to 23.1 billion. They say operating income also increased to 11.2 billion. Let's move down. Net income increased to 9.9 billion throughout the quarter, or 94 cents per diluted share. The expectations were somewhere between 58 and 60 cents, depending on where you looked. So they beat by 70%, 60%, something like that. They also had a beat on revenue. Their free cash flow improved to an inflow of 21.4 billion for the trailing 12 months, compared with an outflow of about 20 billion for the trailing months last year. So a $40 billion swing in free cash flow. Now, their free cash flows have been all over the place. I mean, from negative $17.7 billion in a quarter to just a couple quarters ago hitting $13 billion in free cash flow. They're very lumpy, but they have talked about trying to focus on profitability more. And I think this is a good step in the right direction. Let's look on the annual here. The free cash flow for last year was negative 17 billion. Now they will be dropping this quarter of positive 13 billion after this quarter and the upcoming quarter. But if they could go from a negative $17 billion free cash flow company up into the positives again, I think the market's going to absolutely love that. And they have spent so much money trying to build out their operations, build out delivery, and build out their cloud business as well. I think they can scale back a little bit and then become much more profitable. Now, the company itself, I think, is an absolute behemoth. They're one of the quickest growing companies that you can find out there in terms of revenue, especially considering how big they actually are already. I mean, they're doing $500 billion worth of revenue last year. This year, they're probably going to be close to, $600 billion. And over the last 5 years, they've been growing at 24% a year. So I love this company. This is a company that I own. And the fact that they're trying to focus more on cash flows and focus more on returning capital to shareholders, actually doing some buybacks here recently, I think is a really good step in the right direction if they can continue to grow at the pace that they're growing. Now, their cloud business is growing pretty quickly as well. From what I could see here, it was around 29% year over year, which is a big improvement and is higher than both Azure and also Google Cloud. So they are smaller, but they are growing pretty quickly, much quicker than Google at this point. So this is a company that I own. I also own Tesla. I like to bring this stuff up every once in a while because some people think I only own crypto because I talk about crypto a lot, but I do really believe in some of these other companies, and I am well diversified among them and not just in cryptocurrency because I think it's just safer that way. Now let's take a look if there's any big movers. Floki making a huge move today, up 21%. Not sure there was really much news on that, but that is good to see. Gala making a big move up, 12.3%. Dogecoin, Pepe. You can see it almost looks like the money's flowing into some smaller cryptos, whether they be gaming or just straight up meme coins. So maybe a little bit of a runoff right now, a little bit of a flow into some higher risk cryptos. I know a lot of people have been talking about investing in these higher risk cryptos because they think that money will flow from Bitcoin. I think we still have a while to get there, but let me know your thoughts on that underneath the video. Thank you so much for watching. I appreciate it. Check out Bag Tracker AI and Treasure underneath the video, and I'll see you in the next one.